Watch video 48 on Chapter 10, Risk, Return, and Performance of Funds from the Workbook for NISM Series 5A, Mutual Fund Distributors Certification Examination, and review the multiple choice questions and answers. 1. What does CAGR stand for? A. Compounded annual growth rate. B. Continuous annual growth rate. C. Compounded average growth rate. D. Continuous average growth rate. Answer: A. Compounded annual growth rate. 2. What was the initial investment amount in the example? A. 5,000 rupees. B. 10,000 rupees. C. 15,000 rupees. D. 20,000 rupees. Answer: B. 10,000 rupees. 3. At what price per unit did the investment occur? A. 5 rupees. B. 10 rupees. C. 12.50 rupees. D. 15 rupees. Answer: B. 10 rupees. 4. How many units were initially purchased? A. 500 units. B. 1,000 units. C. 1,200 units. D. 1,500 units. Answer: B. 1,000 units. 5. What was the ex-dividend NAV after the first dividend payment? A. 10 rupees. B. 12.50 rupees. C. 15 rupees. D. 17.28 rupees. Answer: B. 12.50 rupees. 6. How many additional units were purchased with the first dividend reinvestment? A. 60 units. B. 72 units. C. 80 units. D. 100 units. Answer: C. 80 units. 7. What was the total number of units after the first reinvestment? A. 1,080 units. B. 1,100 units. C. 1,152 units. D. 1,200 units. Answer: A. 1,080 units. 8. What was the ex-dividend NAV after the second dividend payment? A. 12.50 rupees. B. 14.85 rupees. C. 15 rupees. D. 17.28 rupees. Answer: C. 15 rupees. 9. How much was the second dividend payment in total? A. 1,000 rupees. B. 1,080 rupees. C. 1,200 rupees. D. 1,500 rupees. Answer: B. 1,080 rupees. 10. What was the final value of the investment after 1.51 years? A. 10,000 rupees. B. 15,000 rupees. C. 17,280 rupees. D. 20,000 rupees. Answer: C. 17,280 rupees. 11. What is the formula used to calculate CAGR? A. Final value / initial value, (n). B. Initial value / final value, (1 / n). C. Final value / initial value, (1 / n, 1). D. Final value, initial value, / initial value. Answer: C. Final value / initial value, (1 / n, 1). 12. How long was the investment period in years? A. 1.25 years. B. 1.51 years. C. 1.75 years. D. 2.0 years. Answer: B. 1.51 years. 13. What was the CAGR calculated in the example? A. 30.5%. B. 36.85%. C. 43.65%. D. 50%. Answer: C. 43.65%. 14. What impact do loads have on investor returns? A. Increase returns. B. Decrease returns. C. No impact. D. Increase volatility. Answer, B. Decrease returns. 15. What is an exit load? A. A fee charged upon investment. B. A fee charged when selling mutual fund units. C. A tax on profits. D. A type of guaranteed return. Answer, B. A fee charged when selling mutual fund units. 16. What must be considered for calculating investor returns? A. Only the scheme NAV. B. Only the initial investment. C. Entry and exit loads. D. Future market trends. Answer, C. Entry and exit loads. 17. How are holding period returns calculated for periods over 1 year? A. Simple returns. B. Average returns. C. CAGR. D. Estimated returns. Answer, C. CAGR. 18. What is a rolling return? A. A return over multiple years. B. The average annualized return over multiple holding periods. C. A return that is continuously calculated. D. A return that includes taxes. Answer, B. The average annualized return over multiple holding periods. 19. What factors should be evaluated in addition to return performance? A. Investor age. B. Consistency of returns and risk factors. C. Scheme popularity. D. Global economic trends. Answer, B. Consistency of returns and risk factors. 20. What is a major risk in equity funds? A. Low returns. B. Price fluctuations. C. Guaranteed returns. D. No risk. Answer, B. Price fluctuations. 21. Which type of funds are often used for generating regular income? A. Equity funds. B. Hybrid funds. C. Debt funds. D. Commodity funds. Answer, C. Debt funds. 22. What may cause fluctuations in a debt fund's NAV? A. Changes in investor sentiment. B. Interest rate changes. C. Economic growth. D. Tax reforms. Answer, B. Interest rate changes. 23. What does gating provisions refer to? A. Locking in investment for a fixed term. B. Restrictions on withdrawals from a fund. C. Guaranteed returns for investors. D. A method for calculating returns. Answer, B. Restrictions on withdrawals from a fund. 24. What risk is associated with arbitrage funds? A. No risk. B. Interest rate risk. C. Price movement risk. D. Tax risk. Answer, C. Price movement risk. 25. What is the significance of SEBI regulations for mutual funds? A. They ensure guaranteed returns. B. They provide a framework for fund operations and disclosures. C. They regulate the entry of new investors. D. They determine fund manager salaries. Answer, B. They provide a framework for fund operations and disclosures. 26. What should investors consider when selecting mutual funds? A. Past performance alone. B. The advisor's reputation. C. The consistency of performance and risk levels. D. The popularity of the fund. Answer, C. The consistency of performance and risk levels. 27. Which of the following is a characteristic of small cap funds? A. Lower risk than large cap funds. B. Higher potential returns with higher risk. C. Guaranteed returns. D. Stable NAV. Answer, B. Higher potential returns with higher risk. 28. Which mutual fund strategy is often misperceived as risk-free? A. Equity funds. B. Debt funds. C. Arbitrage funds. D. Liquid funds. Answer, C. Arbitrage funds. 29. What does the term investor return refer to? A. Returns calculated without loads or taxes. B. Actual returns received by the investor after loads and taxes. C. The scheme's published return. D. Projected future returns. Answer, B. Actual returns received by the investor after loads and taxes. 30. Why might holding period returns be misleading? A. They are always negative. B. They do not account for market conditions. C. They can be influenced by high or low initial or final values. D. They include only fixed income returns. Answer, C. They can be influenced by high or low initial or final values.